And welcome back. China's trade figures have come under increasing scrutiny, particularly over how much the country claims to be exporting. With the export market constituting a major portion of the country's economy, weaker demands are a cause for worry.
Chinese customs officials announced on Wednesday that exports increased at an annual rate of 14.7% last month. This is an improvement over April of last year, when exports were especially low. China's General Administration of Customs says the increase this April comes from an almost 60% rise in shipments to Hong Kong. In March, regulators said exports to Hong Kong increased by almost 93%, but Hong Kong says it only saw a 13.8% rise in imports from the mainland. That's prompting customs officials to investigate whether some businesses might be overstating exports as a way to get around government currency controls. Wednesday's export figures also showed a drop in Chinese shipments to the U.S. and Europe. That's raised concerns over whether China's regulators are able to rely on the export market to boost the economy.
There is now competition from overseas. Labor and other costs in China are rising, so countries like Vietnam are getting an upper hand and are getting some of those export orders.
Over the weekend, at China's largest international trade fair, orders from the country's major trading partners fell. There were 12% less orders from Japan and almost 5% less from the EU. This follows a surprising trade deficit in March of $880 million.
China has encouraged cheap imports to move its economy along, so a trade deficit is unusual. It has always enjoyed a surplus, and now this deficit is showing that China's export market is continuing to shrink.
Taking into account that export figures to Hong Kong may have been overstated, one economist from the Royal Bank of Scotland told the New York Times that China's true export growth for April was only 5.7%, far lower than China's stated rate of 14.7%.